Banks borrowed $200 million in overnight repo facility. This is the highest repo since the onset of the COVID shutdowns and signals a massive need for cash to prevent margin calls from 0 to 200 million overnight. So banks are borrowing $200 million from the Fed. That signals that they are over leveraged and undercapitalized. So in the reverse repo market, money market funds usage collapsed as excess cash plummeted to under 800 billion. In the repo market, bank usage rocket indicated without a doubt that banks are over leveraged and undercapitalized. Both are correlated in opposite ways. A decrease in reverse repo is bearish, an increase in repo is bearish. Both have occurred exactly as you would have expected, as I've been calling out for over a week now. The lack of liquidity leads to margin calls, fire sales of blue chip stocks and bonds, and skyrocketing of heavily shorted equities as assets such as precious metals, meme stocks, inverse ETFs, and indexes. So this is a huge event and really should not go unnoticed. We can see that, over the past couple months, this is the most we've seen in the reverse repo market. So, huge jump in overnight lending. So, or I should say, banks borrow 200 million in overnight repo facility. So this is the highest we've seen since COVID. So that is obviously quite concerning, and it signals that banks don't have the capital on hand to fund their operations. And this makes sense as we actually are seeing unbooked losses at all-time highs for banks. And I'll read out this report from Florida Atlantic. So total unbooked losses on securities at all U.S. banks rose to 559 billion in the second quarter of 2023, up from 516 billion in the first quarter of 2023. So this signals that we have, unfortunately, the largest losses we've seen for banks in a long time, and it signals weakness. There could be some banks going under in the future. I'll go over which banks are most at risk at the end of this video, but let's just talk about this a little more. So looking at banks with more than $1 billion in assets, 78 banks had unbooked losses securities equal to or at least 50% of their equity capital. Those banks are Bank of America, and some others, Charles Schwab as well. So Bank of America had unbooked security losses of 109 billion or 57% of its capital. Charles Schwab, where losses equaled 23.5 billion or 75% of its capital. And then USAA, Federal Savings Bank, where losses equaled 5.8 billion or 60 foot. So these banks have serious problems in terms of their exposure to interest rate risks. It's possible that this could lead to some failures within the next year. And let's take a look at those banks with the worst balance sheets, the worst capital to loss ratio. So we can see First Republic's number 1, First American Trust number 2, Citizen Bank as number 3, Principal Bank number 4, Union County Savings Bank number 5, Citizens Bank is number 8. And we can see those individual branches as well. Bank of Hawaii is on the list. Charles Schwab, as I had mentioned, is on this list. Bank of Guam is on this list. Horizon Bank, Bank of Hawaii, Citizens Bank and Trust, Alabama branch is on this list. Citizens Bank of Philly is on this list as well. American Business Bank is on this list. First Federal Bank, First Bank of America, First Bank, First Fidelity Bank, Bank of Tampa. So there's a lot of issues at these banks. Be aware of them. Obviously, if you're under that 250 FDIC coverage, you'll be fine. But if you're over that, just be aware of this list that these banks could go under. And from a capital perspective, they are over leveraged and are at massive risk. So this is a huge issue. This kind of underpins what we've been seeing over the past couple quarters in terms of liquidity and bank losses. Obviously, we saw what happened with SVB. That was kind of just unbooked losses. They had really gone bullish on the longer end of the treasury, and that really caused them to be in a huge over leveraged position as interest rates rose over 1,000% once they made that move. So there are a bunch of issues within the banking sector right now. Be safe out there. I hope you enjoyed this video. If you did, please leave a like and subscribe. And I made a video earlier in this week where I talked more about this liquidity issue. The Fed is also selling down their MBS portfolio, and I'll link that video at the end of this video right here. So with that being said, I hope you enjoy this video, and I'll see you here next time.